All right, let's get right into it. Today, we're going full CSI on one of the most interesting growth stocks out there, Boxer Superstores. We're using a fantastic report from Anobite Forensics as our roadmap, and we're going to perform a complete financial autopsy to figure out what really makes this company tick.
What's so fascinating about Boxer is its backstory. For years, the market had this nickname for it, the crown jewel in exile. Why? Well, because it was this incredible high-growth engine trapped inside its much bigger and kind of struggling parent company, Pick and Pay. So when it was finally spun off, everyone saw it as a liberation, like a champion boxer finally being let out of his cage and into the ring.
But here's the catch. That freedom came with one heck of a price tag. And this, right here, is the central puzzle we need to solve. On one side, you have an absolutely elite business. I mean, a 30% plus return on capital. That means for every single dollar they put into the business, they get 30 cents back in profit every year. That is world-class stuff. But on the other side, the market is asking you to pay 30 times what the company earns in a year just to own a piece of it. That's a price that basically demands perfection. So that brings us to the core question of our entire investigation. Is this an incredible business that's actually worth that premium price? Or has the market's excitement gotten way ahead of reality? We're about to dig into all the evidence to find out.
Okay, Section 1, following the financial clues. First things first, we're starting the financial autopsy. Because to really understand any company, you've got to check its vital science. And let me tell you, Boxer has one of the most powerful economic engines you'll find anywhere in retail.
It all kicks off with this concept called negative working capital. Now, that might sound a little dry, but trust me, the idea is incredibly simple and unbelievably powerful. Just imagine getting a giant interest-free loan from your suppliers to fund your entire business. Well, that's pretty much what Boxer does. They get paid by customers like you and me way before they ever have to pay for the products we just bought.
And check this out. This is how it all works in practice. It creates this unstoppable cash flywheel. So, step 1. They get all their stock from suppliers on a 60-day credit. But then, look at step 2. They sell all that stock in just 25 days. Step 3, they get your cash instantly, which means, and this is the genius part, they get to use that cash, that float, for a whole 35 days before their bill is even due. And what do they do with all that free cash? They use it to open new stores. It's a self-funding loop where growth literally pays for itself. It's brilliant.
And as if that cash machine wasn't enough, they have a balance sheet that's an absolute fortress. They're sitting on a net cash pile of 1.1 billion rand. And don't let the debt figure on their books fool you. It's not bank loans. It's mostly just an accounting thing for their store leases. This company is financially rock solid, ready to go to war, whether that means a price war with a competitor or just expanding like crazy. All right, Section 2, inside the Boxer machine. So the financials, they're spotless. But numbers only tell half the story. Now we need some qualitative intelligence. How does this machine actually work on the ground? What makes someone walk into a Boxer instead of the store right next door? So here's a really crucial point. Boxer is not a hard discounter like an Aldi, a place that sells its own weird, cheap brands you've never heard of. No, Boxer is what's called a soft discounter, and their genius is selling the famous national brands that everybody knows and loves. We're talking your Coca-Colas, your Tiger brands, but they sell them at prices that are almost as cheap as wholesale, and they do it all inside a clean, modern supermarket. They're giving you both value and dignity. But here is their real competitive fortress, their true moat. Boxer is the main place where millions of South Africans go to collect their monthly government social grants, the SASSA payments. And this is huge. It embeds them right into the financial heartbeat of the entire community. They're not just a grocery store. They're basically the community bank. That builds incredible trust and guarantees a massive flood of customers every single month. Okay, let's move on to Section 3, engines, drags, and moats. It's time to perform a little surgical dissection on this company. We're going to break it down piece by piece and see what's really driving it forward and what might be holding it back. And, well, one look at this chart tells you pretty much the whole story. This is, without a doubt, a supermarket business. The main Boxer Superstores, that's 90% of the revenue. The liquor and hardware stuff, they're basically just little side hustles. The Anobite report calls the Superstores division the Fountain, and it is the perfect name. It's the cash cow, it's the engine room, it just gushes profits and cash that funds absolutely everything else in the company. But then, you've got what the report calls the black hole. That's the Boxer Build hardware division. Yeah, it's tiny, but it's a drag. And why is that? because it's tied to the construction industry, which is super cyclical. It booms and busts. That's the total opposite of their stable, reliable food business. It's a distraction, and it's probably pulling down the company's overall returns.
Now, first secret weapon. This is so cool. Did you know that Boxer owns its own gigantic meat processing plant? And listen, we're not talking about a little butchery in the back of a store. This is a full-blown meat factory that makes Boxer one of the top 3 sausage producers in the entire country. This gives them a massive cost advantage on things people love, like their famous polony. And it lets them create these combo deals that their competitors just can't possibly match. Now that is a hidden moat. So what we're left with is a really complex picture, right? We have this incredibly powerful cash machine with a couple of small drags and a sky-high valuation. So let's get into section 4, the bull versus the bear, and really weigh the evidence for both sides. And this is where the real fight is. You've got 2 camps. On one side, you have the bulls, the optimists. They're saying, look, ignore the noise. This is a long-term structural winner with a massive market still left to conquer. But then you've got the bears, the pessimists, and they're saying, are you kidding me? Paying 30 times earnings for a grocery store is just a bubble waiting to pop, especially when its main customers are struggling. And this ledger just shows the tug of war perfectly. For every single bullish point, there's a bearish counterargument. The bulls scream, fortress balance sheet. The bears yell back, PE ratio of 30. The bulls say, hey, they're growing sales faster than inflation. The bears whisper, yeah, but what about that soft November? It's a perfectly balanced argument with strong points on both sides, which leaves us with the final and most provocative question. Is Boxer an elite operator that is simply priced for the perfection it is probably going to deliver? Or is it a ticking time bomb? A fantastic company, sure, but one whose valuation has just become totally disconnected from economic reality. The evidence from our investigation is all on the table. The final verdict is up to you.